Hey, Miss Laurie, how are you?
Hey, how are you, Michael?
It is good. It is a Friday.
Yes. Welcome to the work week wind down session.
Yeah.
So I am so over this week, and I feel like I need to have a wine
Yeah,
glass in my hand right now.
I
And
know. Next time. Next
I
time.
know, I know. I said earlier that it's not 5 o'clock here yet, but
Yeah.
it's 5 o'clock somewhere. So
5 o'clock somewhere.
right.
That's what they say.
Right. So, but thanks so much for agreeing
Yeah.
to be able to bring this great information
Yeah.
to all of our viewers and our followers.
Hmm.
It's been a buzz. Everyone has been
Yeah.
talking about it. You're either or. You're either
Yeah.
loving the fact that
Yeah.
up to $20,000 of student loans are being forgiven, or you're hating it. Not
Right.
not a lot of people are in the middle.
Yeah.
So I can tell you, me myself personally, I'm
Mm.
loving it
Yeah.
because I came from humble beginnings, a single parent
Yeah.
household. So I personally had Pell Grants.
Yeah.
So I'm in line for $20,000
Yeah.
to go towards my student loans. But the way that I look at it, it's like I've always just thought that I was probably going to just die with student loans, and
I
and
think a
they,
lot of people
they
can relate to that.
right, and they
Yeah.
carry over to my kids, and
Hmm. Yeah.
I'm really happy for the relief.
Yeah.
And I feel like I have a fighting chance of truly paying them off. Now, obviously, the $20,000, it's gonna
Hmm.
make a dent in it, but it's
Yeah.
not going to wipe it out completely. So I personally had Coke. I
Yeah.
just
I
want
mean, my standpoint with it is that, I think of it very similar to like the stimulus packages we got, right? Over
right.
the last couple of years. It's something that, from a macro standpoint, whether you're red or blue, whether you're right or left, or fall
Yeah,
somewhere on the spectrum, right?
right.
It's something that can come down and either be a positive benefit for you, and that's the idea, is to be a positive impact, right? Whether it's
Right.
to like in the past, to stimulate the economy, right? We were
Right.
within the confines of a pandemic and a crisis, and so they were pumping money into the economy. And this is, from my perspective, my humble perspective, this is very similar. It's just simply something where it's not stimulus, but it's a way to start to try and alleviate that. I do see a lot of posts on Facebook. I see a lot of hands raised. I see also a lot of people shaking fists about
Yeah.
this. And my background. For those of you
Yep.
watching not familiar with me, I'm Michael Curtis. I'm a mortgage lender with Movement Bank. I'm also a personal finance coach. I've been doing that for many, many years. And something that I share with my class is that you're going to see a lot of spin. And you can certainly seek out the opinions that you want to seek out as well, and foster those feelings. And whether you agree or disagree with what's happening in the economy from a macro standpoint, what we all really need to be focusing on is what's under our roof.
Mhm.
What we can impact in our household, and utilizing what comes in for those purposes. So you can think of it as a blessing. If you receive that, and utilize the stimulus, utilize the debt, in this case, the debt forgiveness, to your benefit, to reach whatever financial goals that you have. Now, down the road, let's say another 3 to 6 months later, you might have something negative. Again, you just want to prepare yourself for all indications of what might happen, whether positive or negative, that's coming down, right?
Yeah.
Certainly you want to stay off of those spin cycles, as I like to call them. Like, the news is there to glue eyeballs to TVs, and not
Mhm.
necessarily just there to inform. If it bleeds, it leads,
Yep.
right? So
Yep.
whether it's blue or red, left or right, there's going to be a spin or a slant to the information provided. So research it, become knowledgeable on this, and then you decide. You decide for what are your common beliefs within you that makes the most sense.
Yeah.
Anyway, that's my humble opinion on taking a kind of a wide lens on what's happening right now.
Yeah, absolutely. I reached out to my provider, my servicer,
Hmm.
to just kind of get some information, see how I'll be affected if they have any additional information. And obviously, I got that pre-recorded message saying that the call volume is like
Yep.
insane. So I
Yep.
had to wait for a little while, but yeah, they're getting the same information that is basically being fed online. But I'm just like, oh my gosh, it's so overwhelming a little bit.
Yep.
Just trying to figure out, okay, well, how is it going to happen? Are they
Yeah.
just going to make a direct payment, to the institutions or what have you? But I digress. I think I started talking before even introducing myself. So
It's
those
exciting information. I know you're good.
For those of you who don't know me, haven't had the pleasure of meeting me or working with me, my name is Laurie Randolph, better known as GLAM Realty. And I am licensed in both South Carolina and North Carolina. I hang my license with Costello Real Estate and Investments. And Michael is one of my preferred lenders, and he's always been there. I feel like since 2015, 2016, back in the beginning, when I first got licensed, was always there to allow me to pick his brain. And when, Biden announced that the plan was moving forward, I immediately thought of Michael, and I'm like, hey, what's your opinion on this? Can we chat about, what does this look like for my clients, like my buyers that have wanted to end the generational, renting cycle and want to become homeowners, but they may have some issues, and student loans are one of their issues.
Yeah.
So we can dive into that first, if that's okay, Michael. I mean, I don't know if it will really make that big of an impact, but if someone that had a higher DTI, debt to income ratio, and they're able to reduce that overall, debt by 10,000 or 20,000.
Yeah.
What does that look like as far as increasing that potential buyer's purchasing power?
Gotcha. Yeah. And it's a big question. And as this information starts to disseminate, around, and people get more and more aware of what's happening, I'm getting more and more questions and reach outs about it. Before I answer the question, though, I did want to address one more thing. So I'll go back to something here. You mentioned like reaching out to your student loan servicer, right? And again, something that reminds me of what occurred back during the pandemic is similar here. There's kind of a balance here. And so what I'm trying to say is that on the mortgage side, we had forbearances, right? So we had these moratoriums on rent. We had forbearances that came about. And I'll be honest, when that first happened, these are all like new words, essential worker, forbearance, and so for us, as mortgage servicers and lenders, we were like, well, what does this mean? We've got the government that's trying to obviously mitigate things from going from bad to worse at the time. And so forbearance was something that came about. So people, consumers, people with mortgages, lenders, we were all trying to figure it out. I do believe that's what's happening right now from a student loan servicer standpoint as well, is that a lot of these student loan servicers are not really sure of what the infrastructure of this looks like. How are they going to get paid? Like, how is this forgiveness going to work? And so I think as you're receiving this information, keep in mind that from the top down, people are trying to figure this out as well. And that's going to take some time. It's going to take some time for servicers to catch up, have a protocol in place, because within 2 to 3 to 4 months of the forbearance being declared, of course, we had a system in place with our servicing for the mortgages that we service. The same will apply for those student loan servicers that they'll have a framework in place to know what to manage and what to expect from the government and from their people that they're serving with these debt payments as well. Now, as far as your question, right? So you mentioned DTI. So, just to give some education piece for those unfamiliar, DTI stands for debt to income ratio. Something that's very important for lenders is determining your financial vital signs. Okay, so of course your credit score is important, your income, your assets, and all those debt obligations that you have, all those payments that you make. Ultimately, how much income you have versus your debt obligations is what determines how much house you can qualify for. So, for example, let's say me and Laurie will make the exact same amount of money. Laurie makes $60,000 a year, and I make $60,000 a year. However, Laurie has, maybe one small credit card, not a lot of debt. I, on the other hand, let's say I have credit cards, I have student loans, I have auto loan. Well, that means that my debt to income ratio is higher than what Laurie's is. Therefore, Laurie would qualify for more house, but I would qualify for less house because I simply just have more overall debt obligations that come into play. So debt to income ratio, or DTI for short, is what it's called in the industry. And of course, this forgiveness would impact a part of that, right? So we're looking at, $10,000 to $20,000 in student loans being able to be forgiven from the balance. Here's surface level what I anticipate, right? I anticipated having, for the most part, a pretty minimal impact when it comes to the debt. Reason for that, and there's caveats though. We'll get to that too. I know Laurie has questions around that, but it's not so much the balance of debt you have. It's more to do with the monthly payments that you have. Okay, so if you have $50,000 in student loans and 20,000 of that is forgiven, now you have 30,000. Whatever your payment is, if it doesn't change at all, going from 50 to 30,000, well, there's really no change to your debt to income ratio. Okay. However, let's say if you do have, that drop and that recalculates the monthly payment from the student loan servicer of what you're now going to pay them, if it drops the payment, well, absolutely, it's gonna free up more income, right? Because not more income is earmarked for that student loan anymore. It's been freed up because of the forgiveness and because of that drop.
Right.
Yeah.
Okay. That makes
so that would be the first step. Yeah.
Okay. All right. So, and I'm not sure, there may be some people that haven't heard any of the specifics on the program. They may be, I don't know, out living their best life, not paying attention to the news circuits or whatever. But so for individuals, they have to have an income of 125,000 or below in order to qualify. And it's $10,000 unless you have a Pell Grant, and that is $20,000 if you actually had that.
Something that I'm able to speak into is how the adjustment may or may not have a impact into their debt. From a real estate standpoint. Now, one way it could have a positive impact, right, is let's say if your balance for student loans was 20,000 or was 10,000. Well, in that instance, now we're in a situation where this is going to be forgiven and maybe something that could be simply wiped out completely, freeing up that monthly income.
Right.
Here's what's important about student loans as well, and this is something that has not changed, but is still very, very important for people to know, is that there's different loan programs. For example, conventional loan program, Federal Housing Administration Loan Program, or FHA for short, Veterans Affairs, VA loan program, and they all vary some with how they will treat student loans. And I would expect with these changes, that adjustment is also going to come into play with not necessarily change the way they look at it, but may accelerate where the positive factors would come into play more quickly for individuals. And what I'm trying to say is essentially, if we have debt that is basically knocked down to a minimal amount, so even if the student loan isn't completely paid off with this forgiveness, but let's say it puts it in a situation where 10 months or less on the student loan is remaining after the forgiveness, well, we can completely avoid that in that debt to income ratio that I've been describing. Like we can ignore it completely from a loan program standpoint because the debt has now gone into a place where it's going to be paid off within a year, very soon. So that's what I mean. Like it can help accelerate the
Gotcha.
positives for people as well. So it might not make it an immediate change, but it could put them in a faster lane for showing that it's going to be that student loan is going to be going away.
Okay.
Another really important factor when it comes to student loans is the way they view them in general, whether or not there's any forgiveness. Conventional, for example, will allow income driven payments, which is very important, right? So if we have $100,000 balance on a student loan, the income driven balance, income driven payment, right, that is set by the student loan servicer is going to be based upon the income of the individual. Excuse me. And so that's going to work to try and make the debt more affordable for the individual, right? And then it also places that payment in a lower tier to allow the individual to qualify for more house. Even FHA, they've even actually very recently rolled back how hard they review and look at their student loans. They used to count a full 1% of the balance as a payment, and they've actually retracted that to 0.5% of the balance as what they look at if the payment is an income-driven status or if it's in an no status at all, if it's deferred or in forbearance. So all these things are working towards the benefit of the consumers. And I think these forgiveness balances that we're seeing, the 10,000, 20,000, is only continuing to work to the benefit of people with student loans and qualifying for what they need and want for a home.
Yeah. Yeah, absolutely. Well, you just answered my other question that I had for you. With because I have new clients coming to me all the time, and just not understanding. Okay, well, what should I do as far as student loans are concerned? They're coming straight out of college, or they've had some student loans, and they're not making payments on them, right?
Yeah.
And it's just trying to get them to understand that whether you're making payments currently right now or not, that balance is going to be taken, and like you said, whatever percentage that appropriate loan allows, that's going to be used to come up to determine what that dollar figure would be for a monthly payment.
Right. And let's kind of brush through that. What's important here is loan programs, when they see a student loan that's deferred or in forbearance, right? From your perspective as a consumer, it's something you don't need to tackle right now, right? You're dealing with going to school, let's say, or your forbearance is typically if there's a crisis of some kind. And so if you're in one of those statuses, as a consumer, you're not paying anything. However, from a loan program standpoint, from a mortgage standpoint, mortgage is a long term. You're marrying this loan, this house that you're going to buy. So we're talking about 10, 20, 30 years having a mortgage. And so the thought process from the loan program is that, hey, it might be in forbearance now, it might be in deferment now, but in 1 year, 5 years, and 10 years, this might change to an amortizing payment. And so that's why they come up with these calculations to where, if you're in deferment, they're still going to count something into that. They're still going to count something overall with that.
Yeah. Yeah. All right. Well, cool beans. Well, I don't want to make this too long and drawn out. Just wanted to, hop on and give some pertinent information. And we are trying to wind down.
It's the wind down. That's right.
From our work week.
Uh-huh.
So any parting advice or words of wisdom, anything that you'd like to share?
Yeah, it just goes back to like what I was saying earlier, is that it's just, people get really worked up. They get really worked up when they see things like this happen, and they look through it through a political lens, whether positively or negatively. I think it's just really, really important that you're intentionally managing what's under your roof to start, right? Like we can start there within our sphere, and then finally, if there's something you really, really don't like, there's something really, really important that we get to do, right? It's called a vote. It's voting.
Yeah.
And so make sure that you're getting out there and you're doing that as well. We got some of that coming up soon. So, I think if I was to leave any type of advice, if everybody else forgets anything else, remember what's going on underneath your own roof, or work towards enriching that. And then, of course, make sure you're voting as well.
Yep. Yep. Absolutely. I echo both.
Mm-hmm.
Both of those sentiments. So, but thank you so much,
Yeah.
Michael. It's always a pleasure just chatting with you. And we invite you guys to, tune in for additional work week wind down session.
Yeah.
We're gonna, plan on doing this on an ongoing basis, and we'll talk about different topics and all. So I'm looking forward to it. So
Yeah, we'll keep it real casual. I
yeah,
know real estate and mortgages, people start feeling like it's like, oh, I gotta come in with all the answers. And that no, you don't. Just come in,
no,
listen, join
yep,
us, ask questions. That's it. But
yep, that's it.
that's
That's
all you
it.
gotta do.
All right. Well, thanks so much,
Yeah.
Michael. I appreciate it. And all
Likewise.
right.
All right.
All right. Thanks so much.
Thanks, Laurie. Bye.
Bye.